Shares of Apple up more than 5% after reporting record profit and revenue in its earnings report yesterday. Despite supply chain hurdles, Apple beat analyst sales estimates for all product categories except iPads. The company did not provide official guidance for the current quarter, but CEO Tim Cook told CNBC's Julia Boorstin they are expecting solid year-over-year revenue growth for the March quarter. Let's begin. Amit Daryanani from Evercore ISI. Great to see you. Thanks so much for joining us. I mean, clearly these results were excellent, and the market is welcoming them today. Were there any weaknesses?
Boy, I'll tell you, it's tough to find a lot of weaknesses on the screen. I mean, the two things you worry about a little bit, iPads were a little bit below expectations. Again, you mentioned this, but supply constraint, I think, to the brunt of that. The other part is, just as you look at these numbers, growth rates are starting to slow down, right? Part of that is Apple just grew very fast, 50% plus last year at this point. So those growth rates are decelerating to mid-single digits as we go forward. But this was a very impressive print in aggregate across the board from the company.
On that top-line growth point, I mean, how tied do you think they'll be to economic performance? And if there's a bit of a slowdown in GDP in the US, do you think that will hit them? And if it does, do you get a rather big reaction in terms of the multiple?
Yeah, it's a great question. I think you take slowing GDP, the potential for stimulus checks to not be there, right, as you go through the year. Those things could have some impact to the demand iPhone revenue numbers that the company has. I think the flip side of that, though, is two things. One is, do subsidies for iPhones keep getting bigger, right? As carriers and cable companies now start to fight for iPhone users or cell phone services, does that make the phone at the end of the day cheaper for us, even if there's a GDP slowdown that happens? The other big part I'll tell you on the story is the 1.8 billion iOS devices that are out there, and the monetization of that could have a very high ceiling despite the 19.5, 20 billion services business Apple has today.
Is it getting harder, Amit, for you guys to forecast what to expect from Apple? I mean, it's a big move, 5.5%, and it was a big sort of miscalculation on the part of analysts. You guys were expecting 1% growth on iPhone demand. They delivered 9%. So without the sort of explicit guidance that they haven't been doing since COVID, is it harder to expect what comes next?
I guess, Sarah, it's always easier for me to know what you'll do when you tell me what you're going to do, right? And Apple's not telling us what the guide will be formally anymore. So yes, it's getting harder. What else is, if you step back and think about it, I think the bigger challenge that they've had and what everyone's having with right now is it's very hard to predict what supply chain availability and component availability looks like, right? And what happens with that has a bigger ramification to the output, which is the revenue numbers that the company comes out with, right? I would say that probably has been the single biggest wild card to predict is how's the supply chain ramping up for Apple versus others.
So what happens now, Amit, to the forward estimates and your price target?
Yeah, listen, forward estimates, I think, will inch higher for everyone. I'm sure they have. The exciting part for Apple, I'll say, in the next 6 months is you probably have one of the more exciting set of product lineups coming out of this company, right? It's going to start with the iPhone SE3 in a couple of months. You have iPhone 14. We believe you'll have an AR/VR device by the end of this year. And so you have a whole host of new products coming out. Historically, and I think this will be no different, the stock has worked very well into a new product cycle, and I think you could get multiple new products out in the next few months. We have an outperformed $210 price target for year-end over here.
Amit Daryanani, thank you for joining us.